Hello guys and welcome again to my channel. Today we're going to talk about one of the topics in doing the audit already or the testing phase already. So this lecture is made assuming that you are already masters of audit planning related topics. Actually, doing the audit entails performing test of controls and substantive test. But how do they differ? We are going to talk about that in this episode. And aside from that, we're going to discuss test of controls in detail also. But before that, my name is Gletsmar B. Kasama, and here's a short intro. Now, let's talk about the first topic for this video. So we have test of control versus substantive tests. Actually, many students are confused as to these audit procedures. Students cannot sometimes determine the difference between the two. So I made a very simple definition just for you. So we have test of controls first, which can be very literal, like test of control. But that won't help you in answering multiple choice questions or any questions related to tests of control and substantive tests. So let's be specific, alright? So test of control are tests of processes or tests related to characteristics of a system or characteristics of an element of a process. So meaning if you are going to test again the processes, the characteristics of a process or a system, or an element of a process or a system, that's test of control. I know this doesn't make sense yet, but later I'll give examples and it will make sense, okay? Now, what about substantive tests? Substantive tests are considered direct tests on what composes the financial statements, namely transactions, account balances, and disclosures. Meaning, if your audit procedure is designed directly to determine if the transactions are properly accounted in the financial statements, or if the test involves determining the proper account balance, or if audit procedures directly test if an event or item is properly disclosed, then that procedure is a substantive test. This definition of substantive test makes more sense than this one, right? Just admit it and don't worry. Why? Because we still have examples that will help you. Let's start with the simple examples. Number 1. The auditor tests if there are proper signatories in a document. So what is this? Is this procedure a test of control or a substantive test? Answer: test of control. Why? Because it fits the definition here, right? And aside from that, this actually is not a direct test of transactions, account balances, or disclosures. So it's not a substantive test. It is again a test of a characteristic of a document. Therefore, it's a test of control. Let's have the next example. The auditor tests if the cash in bank is properly valued by doing a bank reconciliation or proof of cash. Now, it's very clear that this is a substantive test, right? Because it is now directly testing an account balance. So that's it for the simple examples. But wait, there's actually more. In an actual audit, some find it difficult again to determine which is which because normally these tests, the substantive test and the test of control, are performed concurrently. What do I mean? Let's have a comprehensive sample situation next. But before that, if you are new to this channel, please subscribe and hit the like button and notification bell and select all to be updated on my next videos. Do it now. Are you done? If yes, then let's go to the comprehensive example. And you need to assume that you are an auditor of a business that sells goods for cash. And for simplicity purposes, as if they do not sell goods on credit. And according to here, the flowchart below describes the collection, handling, and recording of the company. But I cannot present you the whole flowchart yet. So let's take it step by step. So here is the flow. First, we have the customers. Now, these customers, after you have given them services or goods, of course, they are to pay cash. And they normally ask for an official receipt or sales invoice. So that's it for the customers. Now, let's go to the next person. We have here the cashier, which is the ones who will collect the money from the customers and will give the official receipt or sales invoice. But as the auditor, you have learned that an accounting staff is the ones who issues the blank stubs of official receipts or sales invoices to cashiers, and the ones who keeps the duplicates of official receipts and sales invoices intact, which means to say that cashiers have a responsibility to account for all sales invoices and receipts given to them. So they are the ones who will answer if one receipt duplicate is missing, for example, or not properly filled up, or if there are erasures. So aside from these two, the cashiers remit their cash to the head cashier, especially if there are a lot of cashiers. And they are also the ones making their daily sales report, which will be signed by the head cashier and the accounting staff to a certain correctness of the amount by comparing their daily sales report with the cash remitted to the head cashier and the totals on the duplicates of sales invoices and official receipts issued to the customers. The question is, who is this head cashier? So let's assume that this is her, guys. So she accepts the cash from the cashiers, and she is also assigned to deposit the cash daily, as well as the ones who will make total collections report. It can be weekly, monthly, or yearly collection reports. So that's the collection setup. But wait, do you want to know why the accounting staff here is too tired? It's because he is also the one who matches collection reports of the cashiers versus the head cashier's report versus the duplicate receipts total versus the deposit entries in the passbook. And you know what? He is also the one who takes care of the documentary needs of the Vice President of Finance. As well as, he is also in charge in documenting expenses and the payroll and making the coffee of everyone. And I'm just joking, guys. These are all imaginations with a touch of a little reality. He's too tired, right? I mean, it may look like he's asleep and he is dreaming about these beautiful girls, but no, I'm still joking. Anyways, you have also learned as if that the VP Finance is in charge with monitoring all the finance and accounting related systems. And since she is one of the top managers, she makes management reports to other heads of the departments. So now that's what you've learned. Alright? Now, related to this, the question is, what are the possible tests of controls or substantive tests? Let's start with test of control. So, if you want to test if the process mentioned above is actually implemented, that's a test of control. And if you are testing if the official receipts have been pre-numbered and if the duplicates are fully accounted for, that's another test of control. And if you're testing if the employees are functioning as intended, that test is still a test of control. If you want to test if the segregation of duties is followed, that is still a test of control. But before we move forward, do you still remember segregation of duties? Because if not, then I'll give you the short version of it. So here we go. Segregation of duties states that the custody of assets, the recording, and the approval of transactions shall not be merged in one person. Just like in this example, the accounting staff has no custodial function. He does not handle cash. So there is no violation of segregation of duties here, because accounting personnel should only be concerned with the recording function, not with the custodial function and not the approval function. So let's go back again. If you want to observe if segregation of duties has been followed, then that is still a test of control. And lastly, we have if you observe the behavior of the Vice President of Finance. Is she too strict or too easy, or is she competent, or is she very intimidating or influential? That is still a test of control. But do we really need to observe the behavior of the top management? Yes, because it might have an effect on the internal control. If she is too easygoing, this whole process might not be followed, or worse, corruption might occur. Or if the top manager is also very influential and intimidating, there is a risk that he or she can order people around, ordering them to commit wrongs. That is why, if you can still remember, the most important element of internal control is the control environment, which, if translated in simple terms, are the people in the organization and their behavior. So that's it for the examples of tests of control. Now, let's go to the sample substantive tests based on this. So we have bank reconciliation, we have determining the correct amount of the deposits in transit, and recalculation of cash collections. So if you are going to do those, then those are all substantive tests. Since again, they are directly related to testing the composition of the financial statements already. So the composition is again the account balances, the transactions, and the disclosures. So that's it. Now, let's finish this topic with again the shortcut on how to differentiate test of controls from substantive tests. Actually, I've said this at the beginning of the video already. Let me repeat that. If you are testing for the account balances, disclosures, and transactions directly, then what you're doing are substantive tests. But if your test is all about testing the characteristics of a process or objects related to the process or the internal control itself, then those tests are tests of control. So that's it. So let's go back here and let's put a check mark in this one because we are finished with this one. Now, let's go to the last part. Don't worry, this is shorter than this one. So we have test of controls in relation to audit. Actually, test of controls are just tests to confirm your initial assessment that the internal control of the audited company is effective. So if you still remembered, in the audit planning, we have initially assessed the effectiveness of the internal control by understanding it and later assessing the control risk or the risk that there may be mistakes or intentional misstatement that cannot be captured by the internal control system. So such assessment needs to be confirmed by doing tests of control. But here's a twist, here's a catch. If the initial assessment is not good, meaning you concluded that the internal control is weak, you should not do test of control because it's just a waste of time. Meaning, there are times that the test of control is absent when doing a financial statement audit. That's the catch. Because you don't need to confirm that the internal control is weak if initially, in your initial assessment, that is really weak because it's inefficient. But why are we performing test of control? Why do we need to confirm our initial assessment? Answer: because if it is proven that the internal control is effective as a whole or in a certain area, then we can reduce our substantive tests. Meaning, you can perform less effective and less extensive audit procedures than normal. And maybe you can perform those audit procedures at interim periods or before year end. So you don't have to subject the whole year for audit. But here's another twist. Even if you think that the internal control of the audit client is 100% effective, after you have done extensive test of controls, you cannot eliminate substantive tests. You can only reduce them. Meaning, test of control can be eliminated, but substantive tests cannot be eliminated. It can only be reduced if the internal control is proven to be effective. So that's it for this video. On the next episode, we will be talking about substantive tests. And if you learned, please click like, subscribe, and click the notification bell and select all to be updated on my next videos. What do you think of this video? You can put it in the comment section below. And see you on the next episode.